Tech billionaire just revealed NIO stock will go crazy in the following days. What did tech billionaires just reveal about NIO? Why NIO stock will go crazy in the following days? How far is it doing better with other EV vehicles? And why do NIO analysts have a bullish outlook on NIO? Is it time to buy NIO stock? Hey everyone, welcome back to Stock Market News, where we bring you the most recent news about what tech billionaires just revealed about NIO stock. But before we begin, make sure you subscribe to our channel and click that bell icon too so you don't miss out on any of our amazing videos. And let's begin! Electric vehicle stocks have had a wild ride, and NIO is no exception. At first glance, the 13% loss in NIO stock for 2021 does not appear to be too severe. However, the stock has fallen roughly twice as much since hitting a high of more than $60 in February. The stock had been down 50% from its high, and there had been no rally of more than 30% in the 30 days ending on June 16th. NIO's U.S.-listed shares have retreated somewhat in July after rising 25% in June. Management first disputed allegations of exaggerated income from battery sales made by a short seller. The corporation then said July 11th that it would appoint an independent committee to look into the allegations. NIO stock has retested the 10-week moving average as a result of the decline. After falling for much of the year on delisting fears in the United States and China's COVID lockdowns, the once-hot EV stock is now trading considerably below its 200-day normal and more than 57% below its 52-week high. NIO is one of the most intriguing businesses in the electric vehicle industry. However, NIO stock has risen by 30% in the past month, which is classic evidence of a stock bubble. Investors are wondering whether the recent rise has legs. According to recent analyst reports, this is likely. Demand in China is expected to stay robust, and NIO is making its European ambitions a reality. We'll take a look at NIO, one of the most intriguing firms in the electric vehicle industry, and you can determine for yourself if now is a good time to get into or add to NIO stock. How far is it doing? Is it better than other EV vehicles? Volkswagen increased global EV sales by 27% in the first half of 2022. The company said on July 15th that growth was driven by China, where sales of all electric cars more than tripled to 63,500. Just in China, Volkswagen sold more than NIO, which sold 50,827 electric vehicles in the first half of this year. Despite chip and other COVID-related issues, both companies increased sales. The German automaker, formerly regarded as a loser in electrification, is now a rising EV maker, trailing only Tesla and BYD. Volkswagen aims to treble China EV sales this year thanks to strong demand for the new ID.4 electric SUVs. NIO debuted the ES7, a high-tech EV that can accelerate from 0 to 60 miles per hour in less than 4 seconds on June 15th. NIO calls the ES7 the fastest SUV yet, and market observers expect it to compete with the Tesla Model Y, as well as other electric SUVs. Management reportedly mentioned ambitions for a mass-market electric vehicle in 2024 during a June 9th NIO earnings call. The long-rumored, low-cost NIO sub-brand might broaden the company's potential market, spurring growth. The Chinese EV manufacturer also stated that it will begin producing its own battery packs in 2024. On June 9th, NIO reported net losses for the first quarter that were significantly lower than expected. Revenue increased by 24%, just outperforming EV deliveries, which increased by 28.5%. However, weak EV delivery guidance from the current quarter prompted a flurry of price target reductions for NIO shares. However, the EV manufacturer reported an increase in production and deliveries from the beginning of June. Despite the volatility of the supply chain and the difficulty in vehicle delivery caused by the recent COVID-19 comeback, NIO CEO William Bin Lee said in an earnings news release on June 9th. Analysts polled by FactSet estimate NIO's losses to more than double to 63 cents per share in 2022. Revenue is expected to increase by 59% this year. They expect NIO's losses to fall to 23 cents per share in 2023 as revenue rises 72% due to the introduction of new EVs and the lessening of chip headwinds. NIO's Battery-as-a-Service concept, or BaaS, and a number of autonomous driving-related patents are two of the most influential factors in our evaluation. In the example of NIO's BaaS initiative, our relationship with Ford demonstrates the company's efforts to generate revenue from the service. This may give the business an additional revenue stream. The same could be said about its patents, which could let it license its own technology. This is illustrated by NIO's intelligent cockpit, which is powered by Nomi, NIO's artificial intelligence. And as Seeking Alpha noted, the capacity to assemble the parts of an electric vehicle may take a backseat to the vehicle's software systems. However, NIO is not yet profitable, which must cause investors at least some concern. In addition, the capacity to generate cash from other sources helps to conceal the fact that NIO uses a third party to produce its automobiles. That is a factor that some would consider NIO's weakness. Bulls might cite Tesla as another firm with a valuation that exceeds that of traditional automakers. However, Tesla has begun automobile deliveries and has successfully established itself in the United States. NIO is just beginning to gain popularity outside of its native nation. Why do NIO analysts have a bullish outlook on NIO? Recently, the sales projections that Mizuho analyst Vijay Rakesh had previously provided for the June quarter and for the entire year were reduced. Taking into consideration the near-term pressures, the majority of which are outside of NIO's control, he decreased his price target on the company from $55 to $48, bringing it down from its previous level. Despite this, Rakesh's longer-term assessment of NIO remained upbeat due to the robust demand for electric vehicles. In addition, Rakesh believes that the disruptions in the supply chain that have lasted since the beginning of the pandemic will begin to lessen as we move toward the latter half of the year. It is anticipated that the second part of the year would bring additional capacity in foundries, which will assist electric vehicle manufacturers and other automakers in smoothly ramping up production. In general, Rakesh is bullish about the firm over the medium to long term and retains a bullish position on the stock. Before the expected release of its solid-state battery, NIO has been the talk of both the electric vehicle world and Wall Street. Unfortunately, NIO stock lagged behind the company's upbeat outlook, falling 7% on Friday, a gloomy day for the markets. Fans of the EV manufacturer can expect an exciting new battery improvement in the fourth quarter of 2022. Both new and current NIO car owners will be able to get a solid-state battery with 150 kilowatt per hour from the Chinese car company. The old lithium-ion batteries had a liquid electrolyte, but the new ones will have a solid electrolyte and a silicon-carbon composite anode and a nickel cathode. New NIO models will come with batteries that are better than before, but owners who already have one can easily swap in new batteries permanently or once a month. In fact, NIO has already switched out more than 10 million batteries. This is a big deal, especially since NIO just made its 200,000th electric car this year. The new battery will make the NIO models a lot more efficient. Is it time to buy NIO stock? From a fundamental point of view, NIO's finances are getting better after worries about debt and liquidity caused shares to drop. It has reduced losses while attaining substantial gains in revenue. The introduction of new electric cars and continued globalization both suggest that there is more room for growth. However, the electric vehicle battles are heating up as Volkswagen has outsold NIO in China so far this year. After the chip issue, the availability of battery supplies may provide an even greater challenge to the EV stock market as a whole. Nevertheless, NIO's aspirations to enter the battery business may provide some protection against this risk. After suffering a severe loss as a result of concerns of delisting in the United States and the stoppage of operations in China's COVID, NIO stock is looking at a challenging path to recovery. It's still a good EV stock with a high growth rate, so check back for updates on our channel. In a word, now is not the time to invest in NIO stock. And that'll bring us to the end of today's video. Feel free to let us know what you think about it. And if you like the video, please leave a like and subscribe to our channel for more great videos just like it. Thanks for watching, and we'll see you in our next video. Have a great day!